ABSLI Fixed Maturity Plan. Will investing in this policy help you build a financially secure future in the long run? Let us find out in an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to take the right financial and investment decisions to reach your financial goals in a more faster and smarter way. So before analyzing whether this policy will be a good fit for our investment portfolio or not, let us understand a few basic details about this policy first. So let us understand what is ABSLI Fixed Maturity Plan is about. So this is a savings plan that provides life insurance cover and savings benefit to safeguard your family members from financial crisis in case of an unfortunate event. Additionally, this plan helps you accumulate lump sum benefits to achieve all your financial dreams. And some of the key features of this policy are you have the choice of various policy terms and sum assured multiples to suit your needs. You get comprehensive risk cover in case of death of the life insured. You also get guaranteed lump sum benefits at maturity irrespective of market conditions. Enhanced maturity benefit is also available for higher premium. So these are some of the key benefits of this policy. Now let's take a look at the benefits available under the ABSLI Fixed Maturity Plan. So there are two kinds of benefit. One is the death benefit, another one is the maturity benefit. So first we will take a look at the death benefit. So death benefit is given to the nominee or the legal heir in the case of unfortunate death of the life insured anytime during the ABSLI Fixed Maturity Plan policy term. So the death benefit shall be higher of the two of the options mentioned in screen. It can either be the sum assured on death or the surrender benefit. Whichever is highest on the date of death of the policy holder, that will be given as the death benefit to the nominee or the legal heir as the death benefit. So the sum assured on death is defined as a multiple of the single premium paid if they have chosen option A or B depending upon the life insured age at inception. So this is the death benefit. Now let's take a look at the maturity benefit. So at the end of the policy term, you will receive a guaranteed maturity benefit as a lump sum which is defined as a percentage of your single premium paid excluding your taxes and underwriting any extra premiums if you had any. So the percentage depends on the plan option you have chosen, the policy term you have chosen and the premium band you have chosen. So it all depends on these factors. So these are the benefits available under this policy. Now let's take a look at the advantages and disadvantages of investing in the ABSLI Fixed Maturity Plan. First let's take a look at the advantages. So as an advantage, you can enjoy a hassle-free single investment plan with fixed maturity benefit. You also get benefit from tax advantages on the premium paid and the benefits received under your maturity policy. So you can access even a loan against your policy with a maximum loan amount of 80% of your surrender value for option A and 65% of your surrender value for option B. So these are some of the advantages. Now let's take a look at the disadvantages of this policy because it is equally important to understand the disadvantages as well because it might reveal the potential risk you might be undertaking by choosing to invest in the ABSLI Fixed Maturity Plan. So in this plan, the major drawback here is it does not include any kind of loyalty additions or other bonuses for staying committed to the plan for a long-term period. Also, your funds are locked until the end of the policy term. So it's a long-term period to keep your funds locked and having no liquidity or access to your liquid cash is also a major inconvenient or major drawback which you need to consider as a disadvantage. And also the returns you get from this policy are very low to consider it as a sustainable income for a fixed maturity plan. So these are also some of the disadvantages you get by investing in this policy. Now as we have understood a few basic details on how this plan briefly works, let's move on to the analysis part of the video where we figure out if this will be a good fit for investment portfolio or not. So how we are going to calculate or analyze that part is by conducting an internal rate of return analysis of the ABSLI Fixed Maturity Policy. So why we do that is because no matter what kind of advantages or benefits you might get from a policy, what matters at the end of the day, the returns we get in our hand. That's why we invest, right? So we are going to conduct an IRR analysis for that purpose. So for that calculation purpose of the IRR, we will assume a 30-year-old male has invested in a single premium of 5 lakhs in this policy, choosing plan option B. So the policy term is 10 years with a sum assured of 51 lakh. At the end of 10 years, he receives a maturity benefit of 8.85 lakh. And the IRR for this cash flow is 5.88% as per the ABSLI fixed maturity plan maturity calculator. So if we calculate the IRR based on the maturity calculator of this policy, we get an IRR of 5.88%. So 5.88% is similar to a fixed instrument where the returns are guaranteed, or you know how much returns you will get. But if you compare this return to other fixed instruments or such as debt instruments like FD, bank fixed deposit, the returns of the ABSLI fixed maturity plan are relatively low. So even if you invest your lump sum in a bank fixed deposit, you can yield better returns than this and also have better access to your funds at any time. In this policy, the lack of liquidity and the low returns are two significant drawbacks of investing in the ABSLI fixed maturity plan. So as we can see from the IRR analysis, it's not giving us a sustainable return and also keeping our funds locked for a long-term period, and so the lack of liquidity also becomes a major drawback. So what we are going to do instead is we are going to conduct another analysis where we are going to do a comparative analysis of this policy and other investment products or other alternative investment strategies available in the market, just to see if we can get better return or better options than this policy. So what we are going to do is we are going to split the coverage and the investment into two different products. We are going to adopt an alternative investment strategy. So instead of investing in an insurance cum investment policy like ABSLI fixed maturity plan, we are going to separate life cover and investment and choose to invest in it separately. So for life cover purposes, we are going to choose to invest in a pure term life insurance policy with a sum assured of 50 lakh, which cost a single premium of 59,000 for the 10-year policy term. So in the previous example, we can see the premium was 5 lakh, but here by choosing the term policy, we can cut down the premium amount and also save 4.41 lakhs, which can be invested in other investment products based on your risk appetite. So if you are a low risk investor, you can opt for debt investments like PPF or something like that. But if you are a high risk investor, you can definitely choose equity investments. In this scenario, we are going to consider an ELSS mutual fund for an investment purpose. This is an equity investment for the lump sum. Why we have chosen an ELSS fund is because we are going to invest in a long term period, and according to its track record, if you choose to invest in an ELSS fund for more than 7 to 10 years, there is a potential to even gain a return of 12% per annum. Based on the track record, as this is a long term investment, we are going to take the risk and commit to this combination of investments. So if you can see, the pre-tax final maturity value in the ELSS fund is 13.69 lakh, but after accounting for the capital gains tax, the post-tax maturity value is 12.86 lakhs. And this combination of pure term life insurance plan plus ELSS investment combined gives you the IRR of 9.91%, which is calculated on the post-tax return of ELSS. So as you can see, by separating the insurance and investment, the returns surpass the inflation rate in the long run, which helps you achieve your financial dreams. And additionally, this approach offers liquidity, which is missing in the ABSLI fixed maturity plan. So these two factors makes the ABSLI fixed maturity plan unsuitable for both your insurance and investment portfolios. So adopting an alternative investment strategy where we choose to invest in insurance and life investment separately has given us inflation beating returns. So this is the conclusion we can get from the comparative analysis. So what is the final verdict? Should we choose to invest in this policy or not? As you can see, this combination of both insurance and investment in one policy may seem attractive for those seeking the best of both worlds. But however, by combining both insurance and investment, it fails to fully deliver on either front. So what we can do is instead we can adopt an alternative strategy where we can invest in insurance and investment separately, because a long-term investment that yields lower returns than a debt instrument is not something very compelling option for parking your lump sum. So you can definitely invest separately in life cover and investment, like as we have done in a previous example. Like for life cover, you can choose a pure term insurance policy which will give you affordable premium for even higher coverage, and investment you can build a diversified portfolio of debt and equity instruments according to your risk appetite, even get inflation beating returns. So as we can see, the funds are also locked until the end of the policy term in the ABSLI fixed maturity plan, and the life cover aspect is also not a strong compared to other options, and it has a high agent commission. So if you choose to adopt this alternative investment strategy, we get liquidity, we get better returns, and there is no kind of high agent commission in that. So we can definitely choose to adopt this strategy and customize it according to our needs to achieve our own financial goals. So you can definitely do that. But if you're struggling to choose how to customize it or how to modify it according to your need, because you do not have the sufficient time or the knowledge to research about the market, then you can definitely choose to involve a finance professional like a certified financial planner who will professionally guide you through the whole financial planning and investment journey process and make it hassle free for you. So investing through a professional like a professional financial planner will also make it very helpful for you in the long run, which you can also consider for a bright financial future in the long run.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.